Oh, hello and good morning. It's me, Kenny Polcaro, your host of the party, and today is Wednesday, June 22nd, 2022. And here's what you need to know. Stocks once again giving back all the gains that they made on Tuesday, right? They rallied hard on Tuesday, and they're all set to give them back today on Wednesday. Treasury yields approaching 3.3%, and then they stall out and back off. J.J. Powell is on Capitol Hill today and tomorrow. Markets are waiting and listening, and we've already had comments from Feds Harker and Feds Dudley about inflation, recession, and interest rates. All very exciting. UK inflation hitting a record high of 9.1%. Germany, France, and the Eurozone are all up next. And what are we having for dinner tonight? Well, I'm going to give you the Croatian baked broiled chicken parts. Now, I'm not really sure why it's Croatian, but one way or the other, it is delicious. So stocks rallied hard on Tuesday, offering investors a lifeline in the ongoing storm that has seen trillions of dollars circle and go down the drain. The Dow up 640 points at 2%. The S&P up 90 points, 2.5%. The NASDAQ gaining 270 points at 2.5%. The Russell up 28 points, 1.7%. The transports are ahead by 195 points or 1.5%. All very exciting. Yet you have to remember that the indexes got crushed last week and have gotten crushed all year. All down more than 20% year to date, with the exception of the industrials, the Dow Industrials, which are down 16%. So why the rally yesterday? No reason. No reason other than we were in a very short-term oversold position as anxious sellers began waving a white flag, usually signaling defeat, right? Leaving buyers in control, allowing them to set the prices by bidding lower. That forced nervous sellers to choke, and choke they did, throwing stocks and bonds and cryptos out the window. Now in this weakened position, all the indexes suffering the worst losses in 2 years. This, as investors remain paralyzed by the growing fear that the Fed and all of its members will plunge the U.S. into a deep recession. Sellers were exhausted, buyers looking for bargains, period. There was nothing new that would have ignited the rally. Nothing. Nothing has changed at all. The recession is coming. Inflation remains an issue. Interest rates are rising, maybe even faster than what you expect. The cost of housing surging, food prices are up, and the cost of gasoline at the pump is pushing all-time highs. Now look, take note, J.J. Powell, right, the Fed chair, and his cohort of big investment banks have all been telling us about how he and they would navigate a soft landing, that he and they got this, that there's no evidence of a coming recession, that this has now turned into how are they going to navigate a hard landing, that they don't have it, and that the recession is coming. The question now is, how hard will the landing be, and how deep will the recession be? As you can imagine, they're still working on that narrative, right? But expect to hear a lot more and a bit more today and tomorrow when JJ appears on Capitol Hill before the Senate Finance Committee today and the House Banking Committee tomorrow, right? Expect all of the smart logic algos to be scanning the headlines as they try to decipher the mess that JJ is calling his testimony. In fact, they're going to get a pre-look at the testimony. They did get a pre-look because JJ releases his comments to the committee before he testifies. So it all gets out there. So the algos are going to have a head start on the interpretation. And it appears that they don't like what they're seeing because this morning U.S. futures are down. They were down big, right? Down between 1.6 and 2.2%, erasing all of yesterday's gains of 1.6 and 2%. European markets, which had just opened, were also all down better than 2% this morning across the board. Remember, smart logic algos are not that smart, in fact, because they can't hear the language. They can't hear the tone. They can't hear the intent of the word in the sentence the way that you and I can hear when we're talking. All they do is see the words. Then they make a judgment as to the meaning of the word in that particular sentence at that moment. So they're usually wrong 50% of the time. And that causes all kinds of volatility as the algos generate buy orders and then sell orders based on what they think the word means at that moment, which in the end usually creates both short and long-term opportunities for the savvy and smart investor. It's like when you talk about the latest fishing boat, you're just talking about it. The boat might cost $700,000, right? But you're talking about it in front of your iPhone. Next thing you know, you're getting ads for that exact boat every single time you open your internet browser because the algo assumes that since you were talking about it, It must mean that you want it because your iPhone is always listening to you. So it must mean you want to buy it. So let's just slam the guy with ads for the boat. Or to be more mainstream, you want to buy a pair of Dunning golf shorts, $89, and a matching golf shirt, maybe it's $69. You want to buy them online, and then every time you open the website, there are suddenly all kinds of ads for Dunning golf shorts and Dunning golf shirts. The algos have made this decision based on the behavior, and the same is true with stocks. They make a decision based on past behavior and the words that they see in the headline and story, and therefore they react, creating opportunity. Every sector yesterday was in the green, led by energy up 4%, technology, consumer discretionary, and healthcare all up by better than 2%. Industrials, financials, consumer staples, and real estate all up better than 1.5%. Communications and basic materials were up less than 1%. The triple levered direction S&P long ETF, the SPXL, gained 7.3%, right? Because it's triple levered. While the contra-side triple levered direction S&P short ETF, the SPXS, lost 7.3%. Retailers gained just under 1%. Semis gained 2.5%. And coal stocks like BTU surged by 7.5% after the Europeans were forced to convert to coal to generate power to replace the lost Russian oil. I have been pointing this out to you for months now, and I reiterated it in yesterday's note. And the airlines, JETS ETF, they did advance by 0.8%, but as far as I'm concerned, they should be ashamed of themselves. They should give every single penny back that we gave them during the pandemic to remain solvent, to remain fully engaged, ready to fly. Because guess what? They're not flying at all. By now, you've heard thousands of stories of flight cancellations over this past weekend alone. The issue, not enough staff, no pilots, no co-pilots, no stewards, flight attendants. The idea that the weather caused all these flight cancellations is laughable. Since when does rain cause the country to shut down to air travel? I mean, it's ridiculous. And the flights that do exist, they've surged in cost. A one-way flight from Palm Beach Airport to LaGuardia or Newark on Thursday evening last night was quoted at $800 by JetBlue and United. I didn't even bother to check Delta because I'm sure there are even more. But hey, inflation isn't an issue, and surging jet fuel prices is only a figment of our imagination. The airlines have also cut the number of flights, and they're using smaller planes. So therefore, there's less seats available, forcing prices what? Up. But they do give you a little wipey to make sure that your seat and seat back are COVID-free. The idea that we don't have enough pilots to me is comical. The job pays upwards of $150,000, $200,000 a year, and the planes basically fly themselves. I mean, come on, who's kidding who? Don't even get me started on that. And where is Transportation Secretary Petey during all this? Guess what? He ended up driving from D.C. to New York because his flight got canceled. How appropriate was that? I mean, it has to make you at least laugh in the middle of all this disaster. Treasury yields rose yesterday to end the day yielding 3.27% as talk of an even more aggressive Fed was all the rage. Richmond Fed President Tommy Barkin telling the National Association of Business Economics, and here it is, and I quote, "We are in a situation where inflation is high, it's broad-based, it's persistent, and rates are still well below normal. The spirit is you want to get back to where you want to go as fast as you can without breaking anything." And then this morning we got Tommy Harkin and Bill Dudley talking about the recession coming, mild as it may be, it's coming, and how they want to get rates to better than 3% by year end. So they're setting you up for that 100 basis point potential rate hike in July because it is clear that inflation is not peaking, it's not subsiding, and it is going higher. They will need to get this conversation, narrative out into the global public square again. They will need to make a 100 basis point move part of the conversation over the next 4 weeks so that they have cover, so that they can point to it and say, wait, what surprise? We talked about this. Oil yesterday ended the day at $110.65, up 1% as demand remains strong and fuel supplies remain tight. This morning, oil is under pressure, down about 4.5% at $104.50 a barrel on a complete reversal of fortune. Forget demand and tight supplies. It's all about the coming recession that the Fed is about to create as they raise rates aggressively in a slowing economy and how that recession will crush demand. Joey's also set to announce that he's temporarily suspending the 18.5 cents a gallon federal tax on gasoline to try and bring the cost down. He's also going to pressure the states to reduce theirs as well, which is only going to ignite demand for more gas, right? It's not going to create supply. So I'd love to know what Brian Deese, director of the National Economic Council of the President, or anyone else in that administration is even thinking. This is a supply issue. Joey and Jen Granholm, who's the Energy Secretary, and Petey, Transportation Secretary, all need to look at the current energy policy and go back to college and retake Econ 101 to understand the difference between supply and demand and what drives prices. In any event, oil's now broken its trend line, but it should find plenty of support right in here between $100 and $204 a barrel. Let us reiterate, demand for energy is not going away. Renewables are not there yet. Rolling blackouts across the nation this summer are expected, and California is probably going to suffer the most. But hey, you guys voted for it. You made your bed, so now you better sleep in it. As I noted, as I said earlier in the note, U.S. futures are giving it all back this morning, and now the market's open and stocks are lower as the algos get a chance to rethink yesterday's move. And with JJ on Capitol Hill today, there's going to be plenty to chew on. Eco data today includes only mortgage apps. And that should be a precursor for new home sales, which are due out on Friday, which are expected to be down by 0.2%. And with the cost of owning a home rising every day, it's going to be interesting to see how this plays out as well, right? Mortgages are going up. The cost of money, the cost of that mortgage continues to go up. And that's going to continue to put pressure on people that, suddenly get priced out. European markets this morning were all lower, taking back the gains from Monday and Tuesday as sentiment shifts and reverts back to heightened fears over surging inflation across the Eurozone and slowing economic growth that will only be exacerbated by a more aggressive European Central Bank that is already way behind the curve. UK inflation this morning was reported, and it's running at a stunning 9.1%, soaring food and energy prices behind the latest move as the cost to live approaches crisis levels in the Eurozone. Just wait until we get reports from Germany, France, and the Eurozone as a whole, because that's going to show just continued surges in inflation. In the end, it's all about how the Fed and the administration is going to navigate this. It's about how the ECB and the Bank of England is going to navigate this. It's about how central banks from the major developed nations will handle this. Because no retail investor is making long-term investment decisions based on what the central banks of the developing world are doing. The risk of a global crash landing is rising every day. No matter what they tell you, as concerns are rising and central banks will go too far and push the economy deeper into a recession that many have been expecting, myself included. I've been talking about it for a while, and I've been telling you that. I was worried at the end of last year that this was going to start to happen, and now it's playing out. The S&P closed at 3764, up 90 points after gapping up on the opening and trading as high as 3779. 3,800 right now represents near-term resistance, while 3,600 continues to remain the floor on the downside. Recall that both Goldman and Morgan have much lower targets on the S&P before this is over. I'm not yet in that camp. I'm still being optimistic that we're closer to the bottom than not. Expect to hear lots of chatter today and tomorrow based on Powell's testimony. Listen to the tone. Listen to the questions asked by our esteemed elected leaders. They will reveal a lot about what they understand and do not understand about markets and about policy. Okay, so what are we having for dinner tonight? Well, we're having this Croatian-style baked broiled chicken parts. Right now, I had this dish in Croatia, and so it's Croatian style. So one way or the other, it is just so simple to make. You don't need a lot. You need legs and thighs. I prefer I prefer those because it's dark meat so much better. Olive oil. You need garlic, salt, and pepper, oregano, chicken broth, and fresh squeezed lemon juice. Right? You want to wash the chicken parts and pat them dry with a paper towel. Season them with salt only, and just set them aside on both sides. Preheat your oven, 350 degrees. Now, in a blender. You want to add the garlic, all the seasonings, the broth, and the lemon juice. You want to blend it well. Then you want to pour it over the chicken parts and let it marinate for 20 minutes, a half an hour. If you want to let it marinate overnight, let it marinate overnight. But then don't preheat your oven until tomorrow when you're ready to use it. Now, Put the chicken in a Pyrex baking dish and cover it tightly with tin foil, right? Place it in the oven. You want to bake it for 75 minutes, maybe 90 minutes. Then you want to uncover it. You want to turn on the broiler, right? Take it off from bake the broiler. Allow the chicken to get all nice and golden brown, like a nice tan. Turn it over so both sides get nice and golden brown. Remove it. Serve this with a classic Greek salad. One of those Greek salads got the cucumbers and the olives and the feta cheese and the chunks of tomato. It's different. It's not a regular, mixed green salad, but it is summertime. That is also a refreshing salad. I'll give you the recipe for that another day. But this dish should probably cost you about $30 to feed a family of 4, right? The chicken being the most expensive part of this whole meal. Everything else you should probably have in your cabinet already. So I suspect that this should cost you about $30 to feed a family of 4. And if you're lucky, you'll have leftovers. In any event, the day has started. The markets are thrashing around. Actually, the Dow has just gone positive on the day. So let's just watch and listen to see how Jay performs. Until tomorrow, take good care.